In this episode, we are going to take another look at the MACD strategy for the simple reason that the last video looked at the MACD on the higher time frame for daily, whereas most traders in futures are day traders. Today, I traded the London Open using one of my algos, and this is the result. And this is what it could be if one lets the algo do the hard work for you. As long as the conditions you set are met, the algo will not hesitate and have second thoughts about opening or closing a position. It is a known fact that 95% of retail traders are unprofitable. I do not think that it's because they are bad analysts at all, but more because their emotions get the better of them. Equity curves like these are likely to give you palpitations in real time. Can you imagine holding onto a position when you're experiencing so much drawdown? That's when a human will tend to close their positions. However, it's not exactly a desirable equity curve. So let's see what we can do to actually improve on this a little bit. So in this episode, I've decided to take a look at MACD with a couple of other indicators. The first strategy will look at MACD with the 200 period SMA, and the second one will be a MACD with the Keltner channel and efficiency ratio. This one is with the MACD and the 200 period SMA. This is a somewhat improved equity curve. Obviously, a little bit more work is still required. Let's see how I put this one together. The MACD needs to cross the signal line, whether down or up. Price needs to close below or above the 200 period SMA. The MACD needs to be below or above the zero line. The histogram needs to be above or below the zero line. The signal needs to be in line with the slope of the 200 period SMA. As for trade management, I use the parabolic SAR trailing stop at default settings. I enter 3 contracts per position. The first take profit is at 30 ticks. The second one is at 60 ticks. And the third position is a runner. And it's closed by a signal in the opposite direction. For the second strategy, I've combined the MACD with the efficiency ratio. The efficiency ratio was developed by Perry Kaufman. It determines whether a market is trending or range bound. In a perfect trend, where all bars close in the same direction and do not overlap, the efficiency ratio will show a value of 100. A perfect sideways market without momentum in either direction will show a value of 0. More specifically, the efficiency ratio compares momentum with volatility. Basically, the efficiency ratio will help you to stay out of the market during range-bound periods. Here are the strategy parameters. The MACD is set to default settings, as well as the efficiency ratio. Entries are generated when the MACD crosses the zero line and the efficiency ratio is above 35. I've incorporated an exit signal for this strategy. This is when the MACD crosses the zero line. I'm using the parabolic SAR for stop loss protection at default settings. Each position consists of 3 contracts. scaled out as follows. The first take profit position is 30 ticks. The second one 60 ticks. The third one is a runner. The runner is closed when an opposite signal occurs. And this is the equity curve that this strategy has produced. And obviously there is need for further optimization to make the curve a bit smoother. The MACD is ideally suited to trending markets where you can capitalize on pullbacks. However, the MACD does not perform very well during ranging markets. This is when you need to bring in other indicators to offset some of the shortfalls of the MACD. The classic MACD crossover strategy is very good for higher time frames like daily. I found that to be extremely good on a daily time frame. However, for day trading, you need to bring in other tools to help you filter out some of the noise in the lower time frames. This is when an algo is very helpful. So imagine that you have 4 indicators on your screen trying to filter out high probability trades. With time in front of the computer, you are bound to suffer from fatigue and distractedness. So what better way of employing an algo to do all the sifting and sorting and monitoring of the various indicators? An algo doesn't have to be fully automated. What an algo does is that it will help you with your analysis. It has high efficiency. It will monitor your parameters. And then when your parameters are met, it will spit out a signal. And then you can manually trade this if you still don't trust a computer to do it for you. However, in this day and age, computers are more efficient than humans, and your algo is not going to trade something that you are not already doing yourself. Some of you might be wondering why I'm beating the drum for algo trading. One thing I've realized since coming into trading is that you don't know what you don't know until you know. Okay, this might surprise some of you. Here are the statistics. As of 2019, about 80% of global trading volume is performed by algos. So you as a retail trader with a single computer in your bedroom, what chance do you stand against this? Isn't it time to reconsider? Algorithmic trading has ushered in a new era for traders. Therefore, retail traders must adapt. Lately, I've become so passionate about algorithmic trading, and this is basically because of the potential results that I've seen in my own trading. I'm offering free live algo trading room session. If you are interested in this, do get in touch with me. What are the prerequisites to join the free live algo trading room? You may wonder. Only the desire to take your trading to the next level, a desire to learn, a desire to improve your results. You don't need to have any coding skills, and I'm not selling anything. The next session I'm planning for the 17th of October 2022 at 12 p.m. Chicago time. Please check with your time zones and get in touch with me on that email. The next video, I will look at price action. Most people will say, I won't use indicators, I use naked charts. But a naked chart is basically a representation of price movement. So when you watch those candlesticks or whatever bar type you are looking at, it's a representation or an indicator of price movement. So let's take a look at this and see what we can do. Okay, I look forward to seeing you in my trading room, or failing that, catch you in the next video.